Welcome back. It's Friday on the Barbecue Investor. What a week. Week kind of started out slow on Monday, and wow, has it picked up. So, crypto has finally found some legs, and does that mean the bottom is in, or is this another midterm rally? I don't know for sure yet. It's looking like maybe it might be in. I still am not completely convinced, and we'll kind of show you a little bit later on the liquidation map. And I'm not trying to make a prediction, guys. I'm just saying be cautious. I've seen this happen too many times where everybody jumps in, and right now it's easy to get that FOMO. It's running, and you're thinking, "Wow, am I missing out?" I would say right now, if you're not in already, I'd wait. I'd wait. I could be wrong. But normally it has a tendency to come back down at some point, and you'll get a better entry point than what you have right now. Now, that being said, there's a lot to like about my portfolio today. I just kind of wrote down a few things, guys, just a couple things here. That SoFi is up about 6%, Coin is up around 9.8, Hood 13%, MSTR 6.8, and BMNR 5.29. And now these are things that are not actually, now the BMNR and MSTR, yeah, they're pretty much, they're following crypto because they're a crypto treasury. But those other three are three that I've been pointing to you guys for a good while that were really undervalued. And during a crypto bull market, it would not be a bad idea to have a little bit of exposure to some things like that. Like I said, SoFi, I think people are really missing out on a boat on it. I don't think it should be tied to crypto as much as what it has been, but for better or for worse, it has been. So, last year we were trading ballpark $32 to $34, and we got as low as 15, and that's when I started DCAing. Now we're up to, I think, around between 18 and 19, closer to 19. Pretty good chance, in my opinion, during the next bull cycle that we maybe reclaim some of those highs. Hood, I think Hood got as high as like 154 last year. I DCA'd some at 60, and then I sold, and then I bought some more back after it got back down in the 80s, and I'm going to hold it probably for the cycle. If it comes back down again, I'll probably add to that position. So if you look at the heat maps right now, and chat's going to get into that, but there sure is a lot of liquidity to the downside. So just be cautious. It's my biggest thing. Don't let the FOMO get you. But on the same token, don't let the FUD, affect you either. So if you've got a position right now, might be a good time to either maybe start taking a little bit of profit or at least put some stop limits on it, just in case, because there's tendencies for the market movers to want to move it back down to get some more of that liquidity. It's all I'm going to say. So, big week, guys. This is probably going to be a longer episode than normal, but you know what? When it warrants it, we're going to do it. So many things going on. Next week, we've got NVIDIA, Jackson Hole. Golly, there's so many things. This week there's been several catalysts from, Scott Bessent to the crypto summit. There's just the Clarity Act. There's so many things right now that are really pumping crypto. And I'm just saying, when it happens like that, just don't get caught up into it too much. But the rest of the market's still looking good too. My thesis all along has been that I still think that before the end of the year, on midterm, we have a chance to have up to like a 10% pullback on the S&P 500. I think we probably need a little reset. And if that happens, you can bet pretty well that probably Bitcoin will have a bigger drawback than that. So if you didn't get as much in as you wanted, like me, admittedly, I've DCA'd some, and I told you I'll be happy to ride that out. However, in a perfect world, I would love to add some more to my Bitcoin before this next full bull run. If not, you know what? I've got some powder that I set aside for that, and I can either get back in on a drawback, or you know what? There's other assets out there that I can put that money in if we have a drawback with the S&P 500 or whatever. So a couple years ago, I would have really been worried. Right now, I'd be trying to chase it. Now I'm just kind of sitting back. I've already got some DCA'd enough to where it kind of takes the pressure off of me. And, my alerts have been triggering. We're going to get into that. Last night, I'm sitting in there watching TV with the family, and I hear my phone beep, and wow, I have an alert from ETH and Bitcoin. Now, you got to understand, my Bitcoin and my Ethereum automated strategies haven't fired since about last August or September. So when they fired, I immediately kind of get on my phone and I told chat, I'm like, oh snap. Does that mean the bottom is in? I don't know. It could be, but you know what? My strategies are they'll usually hold, 2 to 3 months. So they could easily drop back down into the 60s and still hold and then still come back up and make money. So right now, my strategies, let me take a look here. Let me just see. I've had 4 of them fire in the last 2 days. My hype position is a little over 9% up. My Bitcoin is about 5.47% up. My Ethereum is up 2.63%. And I've got a virtual USD that's up 3.5%. So that doesn't mean that's profit yet, guys. That's where they are right now. They could still close in a loss. So we're not going to count them until the trades close. But it does mean that our strategies are becoming active. So those are at least signs that possibly the bull cycle may be getting closer if it's not already here. So we're not going to speculate on that too much because I don't have a crystal ball, and I'm not going to try to make a prediction for you guys because I don't want anyone to lose money on my account. My biggest thing is be cautious, watch everything, and all along I've said, the crypto, just do that with a very small portion that you can afford to lose, guys. I strongly recommend still having a financial advisor. I have one. What you guys see me swing trading with and all these other things, that's stuff that I could afford to lose. Not necessarily that I want to, but I could. The biggest portion of my portfolio is always going to stay under management, or at least in some parts of the portfolio that I control that are much more boring than what you guys might see on here. So next week, I'm just going to tell you right now, I am going to try to get into my automated strategies a little bit more for you guys because I think a lot of you guys know what I'm talking about. Some of you don't. So I'm going to explain how you go about building a trading strategy. And then if you want to automate it, like I have for several of mine, I'm going to show you step by step. It'll probably be 2 different episodes next week. It'll be during our regular barbecue investor episode. But I want to show you step by step exactly how I automate my strategies from TradingView to Signal Stack for me to Kraken. And I'll show you exactly how to do it and possibly even the right JSON for you to send if you're using Kraken, which is one of our affiliates and someone I trust very much. And we'll kind of show you how I send the signals, and then really I don't follow those very much. It could be in the middle of the night, and if something happens, you know what, my alerts will trigger. They will send the signal to Signal Stack. Signal Stack will send the trigger to Kraken, and we will make a buy. And I'll wake up in the morning, look at my phone, and go, oh, well, I bought something. So that's the way they're designed to kind of keep me emotionally out of that, because that signal, it's just strictly based on a strategy that I've set up ahead of time. So anyway, I'm not going to go into that too much right now. Next week, I promise you, I'll cover both those. And, right now, I need to let chat get into this because I told you it's going to be a longer episode, but I don't want it to be a half-hour episode. So chat's got a lot to cover. We're going to get into it, and then I'll come back here and give you a few more thoughts. But for right now, chat, let's get after it.
Well, so much for a slow week. Bitcoin has gone from below $63,000 last Friday to above $77,000 today. Crypto-linked stocks are surging, the major indexes opened modestly higher, and Washington suddenly has both the bond market and crypto market leaning forward. But this is not one simple risk-on story. There are three separate forces at work. Treasury is trying to improve liquidity in long-term government bonds. Regulators are pushing toward clearer crypto rules, and a crowded short trade just became rocket fuel. Let's separate the catalyst from the amplifier. First, the bond market. Treasury doubled the maximum size of its long-term debt buybacks from $2 billion to $4 billion per operation. The goal is to make older, less liquid bonds easier to trade. That matters, but Treasury is not cutting rates. And this is not quantitative easing. It is closer to changing the plumbing than turning on a money hose. Here is Kyle Wool explaining the mechanism.
Yeah, I think what he's trying to do makes sense. It's been around there for the last 5 years to came out with this program. And basically what they do is they go out and they buy long-term illiquid bonds, maybe 15, 20, 30 years out, and they bring short-term new bonds in and they retire those bonds, which creates more liquidity for the market. They typically do this in times of stress or around tax situations. So I think what he's doing gives a little bit of a pause.
The first market reaction brought some relief, but it did not erase the bigger problem. The 10-year Treasury yield was back near 4.7% Friday morning. Investors still want compensation for inflation risk, government borrowing, and an enormous wave of private borrowing to build AI infrastructure. So the accurate takeaway is, Treasury added liquidity support. It did not declare victory over long-term rates. Now to crypto. The strongest fundamental catalyst was not a mystery whale or a magic chart pattern. It was Washington. After the White House Crypto Summit, the SEC advanced its regulation crypto assets proposal, while the Senate's Clarity Act timetable moved back into focus. SEC Commissioner Mark Uyeda described two proposed fundraising paths for crypto projects.
And so this would create what we call a startup exemption and a raising exemption for would-be crypto entrepreneurs. The startup exemption allows you to raise up to $5 million over 4-year periods. You need to provide some basic disclosures, but otherwise, tell the truth. Relatively simple framework to do. We have a bigger one, which allows up to $75 million in any 12-month period. There is a more comprehensive set of disclosures and ongoing reporting requirements.
That does not mean every token becomes a security, or that every token gets a government seal of approval. It means projects may finally get a more predictable path for raising capital and telling investors what they are buying. And if Congress stalls, CFTC Chair Michael Selig says his agency is examining what it can do under existing authority. That gives the market something it has wanted for years: fewer legal guessing games. Coinbase CEO Brian Armstrong says the next important Senate date is September 15th.
Yeah, I think that's right, and thanks for having me on the show. So there's a big Senate vote coming up on September 15th. Leader Thune was good enough to go and schedule that, so we now have a very clear date when the Senate's going to vote on the Clarity Act, and it's been a strong bipartisan compromise, which leads me to believe that it's going to get far more than 60 votes.
Now for the amplifier. Billions of dollars in bearish crypto positions were reportedly liquidated as Bitcoin broke higher. Those forced purchases can turn a rally into a sprint. Regulatory progress can support a longer-term thesis. A short squeeze can exaggerate the speed of the move, and it can disappear just as quickly. These three liquidation maps help explain both the violence of the rally and the danger of chasing it. Start with the 7-day view. The dotted line marks Bitcoin near $77,700 when this image was captured. The red side estimates where leveraged longs below price would face forced closure. The green side estimates the remaining short liquidations above price. As Bitcoin climbed, exchanges had to buy Bitcoin to close losing short positions. That buying pushed price higher, reached more short liquidation levels, and forced still more buying. That is the squeeze we just watched. Now widen the lens to 30 days. The imbalance becomes easier to see. The largest accumulated liquidation exposure is presently below price, with especially heavy concentrations in the low to middle $60,000 region. That does not predict Bitcoin will fall there. It tells us that if momentum reverses and begins closing leveraged longs, forced selling could accelerate the move downward. The 90-day view carries the same warning across a longer history. Large pockets of leveraged long exposure remain below current price, including the broad region from the low 60,000s into the upper 60,000s. That is worth monitoring alongside Brad's thesis that an October or November low remains possible. But the map does not provide a date, and a 90-day setting does not mean liquidation will happen 90 days from now. The seasonal thesis supplies a possible time frame. The liquidation map supplies a possible acceleration mechanism. Neither one guarantees the outcome. And the map keeps changing. Traders who see this breakout and pile into fresh leveraged longs can create new downside fuel even while the underlying market remains constructive. A liquidation map is not a prediction that price must visit a bright line. It shows where leverage could accelerate a move that has already started. Use it as context, not as a treasure map with a guaranteed X marking the next trade. So yes, this breakout may be meaningful. It is still perfectly capable of producing a sharp retest that makes everyone on social media forget what they confidently predicted this morning. The cleanest consumer red this week came from Ross stores. Second quarter sales rose 13%, comparable store sales rose 10%, and management said customer traffic was the primary driver. Ross raised its full-year outlook and now plans to open 115 stores this year. The headline earnings number needs one important footnote. 60 cents per share came from a tariff refund benefit. That is why the traffic and comparable sales numbers tell us more about the consumer than the raw EPS beat. The message is not that every consumer is booming, it is that value-seeking shoppers are still showing up and off-price retail is capturing them. Next week gives this rally 3 serious tests. Wednesday brings core PCE inflation and NVIDIA earnings. NVIDIA will tell us whether the AI spending cycle is still outrunning already enormous expectations. Core PCE will help decide whether the bond market can relax or whether higher for longer rates stay in the driver's seat. Then central bankers meet Thursday through Saturday at Jackson Hole. This year's theme is financial innovation and its implications for payments and policy. Perfect timing considering the week crypto just had, and one outside risk remains impossible to ignore. Pressure on Iran and the Strait of Hormuz is keeping oil near the center of the inflation conversation. A renewed oil spike could complicate every friendly rate cut narrative in a hurry. So the pit board reads like this. Treasury improved the bond market's plumbing. Washington gave crypto a more credible regulatory path. Short liquidations poured gasoline on the rally. And Ross showed that the value consumer is still spending. Next week, inflation, NVIDIA, and Jackson Hole tell us whether this move has an engine or just excellent launch control. That is today's Chat Pit Report. Brad, the grill is yours.
That is a phenomenal job, chat. Lots of things going on, guys. So we want to stay informed. We don't want to get too excited. And we just want to follow what the market's telling us, okay? We don't want to try to read too much into anything. There'll be a lot of news next week. You know, NVIDIA's earnings come out. NVIDIA is still a great company, but normally after their earnings, they don't do so well. Of course, this could be the one time they don't. You know, they could go to the moon this time, but normally I wouldn't get too excited trying to add to a position before their earnings. So that's just from what I've gathered through the years watching them. So that and the Jackson Hole, that could be fuel to this fire, or it could also be a reason to give a little bit of doubt to possibly try to get some of that liquidity to the downside. So just be aware. Try to keep your emotions out of the game if you can. Hey, I'm going off to go cook this weekend. So I'm going to hook up with a couple of my buddies from another team. We're not cooking it as local yokos this weekend, but my girls are going to do the kids' queue. So yeah, going to have a little fun. We're headed to Madison, Indiana is where we're headed. So I'm looking forward to that. I'll be trying to watch the market a little bit while I'm gone. Of course, I'll have my phone. Of course, during the weekend, I'll just be the crypto. And honestly, crypto during the weekend it's hard to take too much of a stand from what happens on the weekend. It's hard to draw too much from what happens on the weekend, guys, because, you know, there's not a lot of people in the market on the weekend, so they can manipulate it more. Usually if there's a big bump up on the weekend, then they'll have to fill that back in sometime during the next week, so don't get too excited. But it's still worthy of watching. Let's keep an eye on it. Let's keep an eye on everything. We'll try to watch each other's back. And our community, we're going to try to keep being aware. We're going to try to keep you informed. And next week, I'm going to show you a little bit about how to possibly build some strategies for yourself. Even if you don't automate them like me, you know what? Build a strategy, and it's something that you can follow on your charts on TradingView. And since I'm more of a regime guy, you could do that, and you get the alert. It sends it to your phone. Okay, maybe you get a hold of your broker and you buy a little bit. Maybe you sell a little bit, whatever the case may be. But it's another tool that you could have to kind of keep your emotions out of it. So I hope you all have a great weekend. I'm going to go cook and hopefully not embarrass ourselves. So I am Brad, and I am the Barbecue Investor, and I will see you Monday.